Indranil Sengupta, Chief Economist India for BofA-ML, which is Bank of America Merrill Lynch, joins us. Indranil, given that we are likely to see new government in couple of months, do you think RBI may still want to stick to glide path on CPI inflation?
Well, I think the RBI governor has already said that the government will fix the inflation mandate in consultation with the RBI. So let's see what happens after the elections.
Indranil, what's your future outlook on CPI and core inflation? Because inflation has eased recently. Is the trend, according to you, sustainable, especially since, risk of high food inflation still exists?
Okay, I think that, CPI inflation can come down to 7.3% next year if the rains are normal. If we do get an El Nino, then clearly, it will get stuck at this 8 to 10% range. So, the path for CPI inflation, I think, is going to be largely determined by the weather at this point in time, rather than, anything that the RBI does or does not do. Core inflation will likely be around 8% as long as we report housing price inflation at around 10%. Clearly, rentals are growing at a much slower pace than 10%. So if that data gets revised downwards, clearly core CPI inflation will also come down.
What is your view on global oil and non-oil commodities going ahead, and how do you see the same impacting inflation?
We are looking at flat commodity prices, both in terms of oil and other commodities. So from an inflation perspective, that would be welcome. But however, the oil prices in India have to be raised to catch up with global prices. So, that process will continue.
And what's your view on liquidity situation, and how do you see the RBI managing liquidity over 1 to 3 months?
Well, I think that liquidity should ease in the first quarter because this is the slack season. And then I think, the swing factor is how much of FX the RBI buys, how much of the FX swaps that were done with oil companies mature. So these two things will decide, what the RBI, how liquidity pans out. And of course, then what are the results in the elections? How do markets react to the elections?
Indranil, the H1 government borrowing calendar has been released. However, do you see changes in H1 borrowing program post-elections? And also, what is your view on FY15 fiscal deficit?
Well, I think there could be some upside risks to the government borrowing program and the fiscal deficit. If the new government, whether it is a new political government or this government, decides to not sacrifice planned expenditure the way we have done for the last 2 years. So let's see what happens on that front. But I would think that, there could be some upside risk to the government borrowing program if, you want higher planned expenditure to step up growth.
And what's your view on the currency finally, Indranil? Because the rupee is now at an 8-month high. Do you see these gains being sustainable?
I think the need of the day is for the RBI to buy FX reserves. And so I hope that they keep on buying FX reserves. FX, our import cover is hardly 8 months. You need to get to at least 10 months. So our baseline call would be that the RBI holds the rupee around 60 and adds to FX reserves, to ensure external security for the future.
What is your view on IIP and the economic recovery? And mining and electricity segments have been doing well, but capital goods and consumption segment remains weak. What is your future outlook on both IIP and GDP growth for this fiscal, which is FY15?
Okay, we were looking at a 5.4% growth next year, assuming normal rains and interest rates coming down. So let's see how that pans out. If the rains are not normal, then probably get to something around 4.8% if you get an El Nino.
Right. So, Indranil, what are the key global risks then to the currency and India's economic growth?
Well, I think the biggest risk to the rupee at this point is a rebound in the US dollar, because the dollar is around 137, 138 a euro. We, for example, as a house, expect it to go to 125 a euro by December. So if there is a sharp rebound in the US dollar, that will impact the rupee. As far as the other risks are concerned, clearly we have to see at what pace the US recovers, whether that's sustainable or not. We think it is, but let's see how it works out. And how China shapes up, because our view is that China will soft land and manage the transition. But let's see how that pans out as well. But right now, I think the biggest issue is what happens to the rands and what happens to the US dollar.
All right, Indranil, appreciate your time and thank you for joining us.